Hey everyone, welcome back to Corporate Decoder, the place where let's just say things are about to get a little pricey for one particular company. Today we're diving into a very interesting report from Netcapital Incorporated, and buckle up because it is all about a company facing a bit of a rocky road on the stock market. Before we dive in, if you love getting straight answers from these dense corporate filings without all the jargon, hit that subscribe button. And hey, we've got a growing community over on Discord where we break down these reports even further. Link is in the description. Alright, so what we have here is a report filed by Netcapital Incorporated. Think of this as a company's live update to the public and the stock exchange about something important that just happened. And for Netcapital, that something is a pretty significant notification regarding their stock. The date of this specific report is the 4th of February 2026. Now, the big news here revolves around the stock price of Netcapital Incorporated, which trades under the ticker symbol NCPL. So, what is this crucial news? Well, the company was officially told by the Nasdaq stock market, or Nasdaq, that they are currently not meeting a basic requirement to stay listed on their exchange. This is all about compliance. Specifically, Nasdaq has a rule that says a company's stock must generally trade at a minimum price of $1 per S-share to remain on their platform, which they call the Nasdaq Capital Market. It is a pretty standard rule to ensure a certain level of stability and value. Unfortunately for Netcapital, their stock price has been below that $1 mark for more than 30 days in a row. This is what triggered the notification letter they received on the 4th of February. Now, the good news, if you can call it that, is this notification doesn't mean they're kicked off tomorrow. Their stock will continue to trade on Nasdaq for now. But here is the crucial part. They've been given a deadline to fix this. Netcapital has until the 3rd of August 2026, which is about 6 months, to get their stock price back up to at least $1 per S-share and keep it there for at least 10 consecutive business days. If they can do that, great, they're back in compliance. But what if they can't? Well, the report says they might get another 6 months, but that comes with extra conditions. They'd need to meet other Nasdaq requirements like the market value of their publicly held shares, and they'd have to formally tell Nasdaq they plan to fix the issue, possibly by doing something like a reverse stock split. Let's talk about that reverse stock split. Imagine you have $10 bills and you swap them for $100 bill. Your total money is the same, but you have fewer bills. In a reverse stock split, a company reduces the number of its outstanding shares, which in turn increases the price per S-share. So if a stock is trading at, say, 20 cents a share, a 1 for -10 reverse split would make it $2 a share. This is a common strategy companies use to meet listing requirements. However, it doesn't magically make the company more valuable. It is more of a cosmetic fix to stay listed. So the immediate impact on trading isn't there, but the pressure is definitely on. The company is actively looking at its options, and that reverse stock split is on the table. This situation, where a company's stock price falls below $1 and they risk delisting, is something we see quite often. It usually signals that investors aren't confident in the company's future prospects or its current financial health. It's a big red flag. Now, financial tables in these reports can be dense, but they tell the real story. While this particular filing is focused on the delisting notice, previous reports would show us why the stock price has fallen. Looking at Netcapital Inc. as a whole, they are involved in providing a platform that connects investors with companies seeking capital. Essentially, they're a part of the crowdfunding and investment space. Let's quickly touch on what is registered. Their common stock with a par value of $0.001 per S-share trades under the symbol NCPL on the Nasdaq Stock Market LLC. That is where the struggle is happening. The fact that the stock is trading at such a low price suggests that the market isn't valuing the company highly right now. Investors might be concerned about revenue growth, profitability, or the overall strategy of the company. Scroll title of each Class I title, what we would usually look for in a more comprehensive financial filing. Like a 10Q or 10K would be revenue trends, net income, cash flow, and debt levels. If those numbers have been heading south, it would explain the stock price decline. For instance, if their revenue was shrinking year after year, or if they were consistently losing money, investors would lose faith. This part here is just standard procedure, checking boxes for specific communication rules. Definitely not the juicy part of the report. Whether they are an emerging growth company or not is also a technicality that doesn't impact the core issue here. So, what is the bottom line on Netcapital Incorporated right now? The company is in a critical situation. Being notified of potential delisting is serious. It signals a lack of investor confidence, which can have a domino effect. It is harder to raise new money. Attract talent and maintain business relationships. The primary risk for Netcapital is clearly their stock price not meeting Nasdaq's minimum bid price requirement. If they fail to regain compliance within the allotted time, their stock could be delisted from Nasdaq. This would likely lead to it trading on a much smaller over the Countermarket, which is generally seen as a negative sign and reduces liquidity for shareholders. An opportunity for them lies in successfully executing a plan, whether it is improving their business operations to drive a higher stock price organically, or strategically using tools like a reverse stock split to meet the listing requirements. The question is whether they can convince the market and Nasdaq that they have a viable path forward. From a Warren Buffett style perspective, you'd want to see a strong underlying business with consistent profitability and growth. When a company's stock price languishes below $1, it often points to underlying business challenges that a simple stock split won't fix. You have to ask, what problem is the company solving? And are investors seeing that value? My take on Netcapital here is that they are in a fight for survival on the public market. The delisting notice is a wake-up call. They need more than just a technical fix. They need to demonstrate tangible progress in their business operations that will restore investor confidence and drive that stock price up in a sustainable way. Otherwise, they risk becoming a cautionary tale. Alright, that is our breakdown of Netcapital Incorporated's latest report. What is your take on these numbers and what they signal for the company's future? Do you think they will manage to stay listed on Nasdaq? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.